Okay, let's jump right into this explainer. Today, we're tearing down the mental journey of the current Bitcoin market to understand exactly where we are, based on some truly fascinating analysis of investor psychology. We aren't just looking at charts and numbers today, we're looking at human behavior. When you really dig into the source material, a distinct narrative emerges about how markets don't just test our wallets, they completely test our minds. We've got a 5-part roadmap to get through today. We'll hit the mental game, stage 1, disbelief, stage 2, facing the music, stage 3, the final bottom, and finally, we'll wrap up with pulling the crowd. Let's kick things off with section 1, the mental game. We're starting here because, honestly, if you don't grasp this baseline, the market is absolutely going to blindside you. The big takeaway from our source material is that surviving a bear market isn't just about staring at price drops on your screen. It is fundamentally about understanding and adapting to shifting investor psychology. The best signals out there, they aren't technical indicators flashing red or green. It's actually watching historically bullish people and pinpointing the exact second they finally throw their hands up and turn bearish. It's a mental game, through and through. And the source maps this whole psychological gauntlet into 3 distinct stages we basically all have to suffer through. You start with disbelief, where everyone just ignores the bad data. Then a slow, painful acceptance creeps in. And finally, total capitulation, complete exhaustion. Knowing exactly where we are in these 3 steps is your cheat code to surviving the cycle. So let's break down that first step, stage 1, disbelief. Let's trace this from the absolute peak. According to the timeline in the source, this stage kicks off right after those euphoric market highs in October 2025. Then you get an initial, sometimes really violent drawdown, which leads into the very first major low around February 2026. This roughly 4-month window sets the chronological rhythm we're going to follow today. Now, the really fascinating thing here is how it exposes our own mental conditioning. In stage 1, practically nobody actually believes the party is over. Why? Because the crowd has been so heavily conditioned by the preceding bull run. They genuinely believe prices will just keep going up forever, so they're totally convinced that every single dip is just a buying opportunity. They completely brush off those initial warning signs. But eventually, the market shatters that floor and puts in a new lower low. Which drags us kicking and screaming into stage 2, facing the music. That new lower low forces the issue. Look at the perfect symmetry in this timeline. We've got another 4-month stretch, running from that first low in February 2026 all the way to June 2026. During this brutal phase, the market just keeps making lower highs. It extends the downtrend until it completely slices right through that previous bottom, establishing a brand new lower low in June. This is the exact moment the harsh reality of the downturn starts to sink in for the broader market. Yet even as things look visibly worse, the psychology is totally fractured. About half the market finally wakes up and admits, okay, we're in a bear market. But the other half, they are deep in denial. They start grasping at financial copium. You'll hear them talking about a super cycle or insisting an alt season is right around the corner. They'll pull up obscure macro metrics like the M2 money supply or ISM manufacturing data, just desperately hunting for any quantitative excuse as to why the bear market can't possibly continue. But eventually, a shift happens right at the end of stage 2. When that new lower low actually hits, all those macrometric excuses just vaporize. The source highlights this moment where previously stubborn bulls are finally forced to face the music, typing out those painful words, all right, maybe Bitcoin does go lower. For a lot of them, it's literally the first time they've admitted it out loud. It is a massive psychological pivot. But listen up, because this is the danger zone. The source gives a massive warning here. If you figure out it's a bear market way too late, let's say you realize it 8 months into the downtrend, you are incredibly vulnerable to panic selling at the exact worst time. Your internal clock is completely off. You might stay stubbornly bearish for way too long, getting totally wrecked by acting like a bull in a bear market, and then getting wrecked all over again by acting like a bear just as the new bull market takes off. And that psychological trap leads us right into stage 3, the final bottom. Following our established rule of 4, this third and final exhaustion phase should take about another 4 months. It launches off that new low in June 2026, grinds everyone down into the deepest despair around late summer, and potentially wraps up somewhere near October 2026. This is the final, grueling stretch of the psychological gauntlet. So what does this final bottom actually look like?
Well, history gives us two very different templates. We've got the 2018 scenario, where the market just gently sweeps the prior low, finds solid support, and sets up a nice rally. But then there's the 2014 scenario. That one was brutal. The market didn't just sweep the lows, it suffered deep, agonizing drops, falling 15% in the spring and then plunging another 18% by October. Right now, we're all just waiting to see which of these two paths that June low is going to send us down.
But here's the thing. Regardless of whether we get the gentle sweep or the brutal plunge, the most critical takeaway from the source is about the mental end game. The final bottom only happens when total exhaustion takes over. It happens when the absolute last holdouts surrender and every single person in the market finally agrees that, yes, we are in a bear market. It's ironic, but once everybody believes it, that is almost always when the bear market is effectively over.
So that begs the question for Section 5, polling the crowd. How do we actually know when everyone's given up?
The source relies on a super practical method to measure this, polling social media audiences. And when you look at current sentiment polls right now, there is a clear moderate tilt. Roughly 60 to 65% of people are leaning bearish, expecting prices to drop, while about 40% are still stubbornly hanging on to their bullish hopes. Now, you know the old trading cliche, right? The majority is always wrong? Well, the source drops a fascinating bit of nuance here that we'll call the 60-40 rule. Surprisingly, when you only have a slight majority leaning one way, like a 60-40 or maybe 70-30 split, the crowd is actually usually right. In an established trend, a 60% bearish majority correctly signals that the downtrend is just going to keep on going. The majority isn't wrong yet. But watch what happens to the market psychology when that data hits an absolute extreme, shifting to an 80-20 split. This is the 80-20 reversal. It is only when an overwhelming 75 to 80% of the crowd turns deeply bearish that conventional wisdom finally flips. At this crazy level of heavy consensus, the majority is finally dead wrong. This massive imbalance is that total exhaustion we just talked about. When only 20% of the market is left believing prices can go up, that extreme bearishness is your ultimate signal for a true market reversal. It marks the definitive end of stage 3. Which brings us to the ultimate question you need to be asking yourself as you analyze the market. As you watch these timelines unfold and sentiment shift, have we truly hit that final 80% capitulation where the crowd is finally wrong? Or, with polls still sitting around 60%, are we just stuck in the long, painful grind of stage 3, waiting for the rest of the market to finally face the music? Keep a close eye on the psychology and you might just spot the bottom before anybody else. Thanks for joining me on this explainer.